All right, ladies and gentlemen, we are live with Real Stocks. Trying to see what the market's going to give us today. Wonder what that's going to be. Let's take a look at some news. Futures fall on jobs report. Tesla takes a big hit is the lead article on IBD. Let's take a peek at that. I think I'm going to keep it like that. Okay, so Dow futures extended losses as the U.S. added more jobs than expected. I guess that usually happens when they're concerned about interest rates. Must appear to smoke marijuana during an interview. Huh. That could be interesting. The wage figure is key to whether Federal will continue to gradual Fed rate hike path, which is what I said a second ago there. Wow. Yeah, that's not good. Hmm. So Five Below stock spikes on earnings. So that's good. Let's go. So that's kind of the. Let's go see what else IBD has to say, and then we'll take a look at the pre-market movers and see if anything's moving this market. China might be the next biotech powerhouse. That could be interesting. And yeah, retail's doing pretty good. Um, my other son's coming in. What's up? Hold on, guys. Guys, it'll be about 5 minutes. All right, that took way longer. Hello, guys. Sorry about that. Kid wet is bad, and just some daddy stuff needs to be done. All right, IBD shill stream. That's right. Click on my affiliate link below. Yeah, there's no affiliate link below. What's up, Ian? It's going pretty good, buddy. Just kind of wondering if the selling is going to abate in the NASDAQ. So I'll actually get right to that because that's one thing I really wanted to look at. Oh, crap, market's already open. Man. So over the past 3 sessions, we've actually seen increased volume in the NASDAQ during this sell-off. And that's a little disturbing. The good news is that after 3 pretty aggressive selling days, we're only down to the 50-day moving average on the NASDAQ, which has pretty much been an area of support recently. So that's the good thing. That's the good thing. Actually, it looks like the 4th test. 1, 2, 3, 4. 4 areas after we came out of this choppy area. This was the Facebook stuff, pretty much. So you see here, we respected the 50-day moving average, chopped around it a little bit. Now we're back to respecting it again. Not in super bull mode like here we were respecting the 10-day moving average. Spiked to the 200 after we were intertwining. That would be fairly normalized. But at least so far we're respecting the 50-day. Even though the volume has been higher. Now you can see here we have seen higher volume in the past. But that was during the more major sell-off here. Kind of your mini correction. I don't know if this is the new normal or what, but we've only had one major correction since 2008, and that's pretty bullish overall. INSG up 4% again. Marijuana stock, MU, Baba. B here, Regeneron down another 1%. That sucks. Fizz pulling back a little bit. But yeah, so in terms of the NASDAQ, you can see the increased volume. Pretty heavy yesterday, one of the heaviest volumes. And so that was kind of, I was thinking maybe yesterday was a bottoming candle. There's a potential for that with it being much larger than the prior few days. So you can see there's a 4th selling candle here intermixed with a green day, which is in lower volume. So higher volume sell, higher volume sell, higher volume sell, higher volume sell. We'll see what happens today. But holding above the 50-day means that all of these aren't actually bad. It means that that's perfectly normal action. As long as you get the high volume above the 50-day, you're typically okay. The problem is when the volume takes you through the 50-day, such in this instance here, that would be a pretty definitive sell signal. And we could get that today. We'll have to wait and see. But not too much is breaking down. We are getting some sell-offs, but keep in mind these sell-offs are coming off of all-time highs. So there you have Amazon taking the multi-year view. Doesn't look like much of an event. Taking a look at Apple. Doesn't look like much of an event. There's much more green volume, as a matter of fact, on the right side of the chart here than there is red volume. So most of these pullbacks so far appear to be pretty healthy. Nothing really bad. Maybe a couple of buying opportunities. If there's any specific names you guys want to look at, let me know. If you guys are back, I know I was gone for a long time. I don't know if I got muted or what, but if you guys are back, let me know if there's something specifically you wanted to look at. Other than that, I think I'm just going to go through some charts a little bit here. I did want to do something. Oh, that's a 5-minute chart. Let me get off the 5-minute on there and go to the daily. I did want to do an exercise, which I'm probably not going to do on air here, but I think I'm going to track some of the top stocks in different industry groups, put them on a spreadsheet, and then relate them to one another and see what sectors are kind of moving the best. You can also do this with ETFs. That's a good way to do it. I'm just going to do it with some individual stock sector leaders just to see if I can get a beat on what may be moving first. So there's Match on the right-hand side here. You can see kind of pulling back after a recent drop to the downside. Volume fairly normalized here. This is a high volume day. It is a big outside bar, but it's also a support day. You can see the higher volume and the fact we didn't close in the lower part of the range. We closed within about 40% of the range, which is pretty much a textbook support day. So hopefully this maintains and match, and we can just continue with the regularly scheduled program here. That would be nice. And this isn't much of a lower low, so I'm not super interested or concerned about that. So let's take a look at these market movers. We got 5, which had really good earnings. AVGO apparently had really good earnings, up 6%. This is a marijuana stock making new highs here recently, so that's pretty good. I actually had a trade set up for that, or did I? I'll have to look. You there, Eli? Hey, Kevin. I remember SMFG. A sell limit at 796. Okay, looking for a bounce there. Yeah, that could be fairly reasonable. 796, that's not too bad. Yeah, that may get hit. Okay, that's cool. Middle of a shopping spree before the new year. Got about 3 months to go there, Eli. 3 months to go. OG. No, I didn't save this one. OGRMF. Check on my earnings. Oh, it has no earnings. That's why. So INSG still continuing. Actually, looks like it's still within yesterday's. Where did? Oh, it closed way down here. Okay, that can be maybe good for an entry on a bit of a pullback. It's not ideal. Ideally you'd like a little more time. Like we had that day similar here. Maybe we can get a few more days and go sideways. So maybe just give it some time. Cron popping up a little bit again, always towards the top of the list. It seems these days. Micron broke down. Funko, man, just going parabolic. This thing's going to be 30, 35 bucks here really soon, it looks like. Control 4 consolidating. After the sell-off there, ZS not doing too bad. Did have earnings, have a negative reaction on earnings, but nothing of a lot of consequence. Boot looking really good, just marching higher. Nothing wrong there with Boot. Alta, good breakout there. Weibo seems to be on our list, but it just isn't a perpetual downtrend. Let's put an alert on Weibo here. This is a Chinese stock that may have something to do with it. Funko again. We're looking at Funko every other time. It seems to be dropping right now. What's going on? UBNT. All right, UBNT looks like after earnings about a week ago, poking into highs again. Let's look at UBNT. This is a very good high-quality name. Actually, we saw the other day it was #1 in its industry group. And so there's your base. Yeah, we're already pretty extended from the base, about 11%. A little too involved to get in for a trade. But maybe there's a potential for something anyways. Let's take a peek. So if you give this thing till October, you have a potential for 100% increase. That would be about 1.5 months. So it doesn't seem out of the ordinary. Not sure if it's a trade I want to take though. TBT, I'm kind of watching this fairly closely. This is a inverse bond. This is the ultra short 20-year bond ETF. And so if bond prices really start skyrocketing due to interest rate rises, then then that could be a good trade right there. I will admit I'm not a particularly good bond person, but when I see a chart and a pattern, got to kind of look at it. Huya looks like it's still kind of hanging out down here. LPLA looks like it popped underneath that trend. Twilio, SIVB, that's a nice little base right there. Nice gap up, attempt to fill the base, came back to highs. Nothing really standing out here. Those last earnings were pretty good, or about 100% year over year almost. 232 would be 464. We're at 442. So, you know, like 90, 80, 90%. So yeah, good earnings growth here in SIVB Financial Group, and it just continues. Let's look at the weekly. All right, looks like it's a little bit extended. We talked about base counts a little bit here, so this is first stage base. 1, 2, 3, 4, 5, 6. This would be a second stage base. So this would be a third stage base, which is considered a late stage base pattern. What that implies is that after a stock has, let me go to the IBD 50 actually. After a stock has more than 2 bases, it's considered a late stage base and more inclined to pull back. However, we're super deep in a bull market, so you kind of just have to go with it. What's this one? SVB Financial. I'm looking for in the IBD 50 real quick. I'll pull it up here so you guys can see as well. SVB Financial Group. There we go, number 27. Breakout point past 329 and flat base stalls is their latest note. Group's 119th. Holding company for Silicon Valley Bank operating via 29 offices in multiple countries. Wow. It's really good. Oh, Twitter's even right down here. So yeah, it doesn't mention a late stage base, but it is late stage. There's your breakout point in SIVB. Come on, whatever. All right, 393 in SIVB. Let's take a peek at that. Didn't realize that was a Silicon Valley banking. That's pretty cool. 392. Yeah. All right, so 392. Not bad. Not the worst possible breakout I've ever seen. So if this continues, there's a pretty good possibility of us getting to that 20% before January. And there's some pretty good all right. All right, Eli, just put SIVB in the watch list right there. So let's put an alert. Something I want to do here as well. Yeah, it doesn't do that. Come on. I want better volume clarity here. There we go. So not the best looking base in terms of a volume signature from what I see. See quite a bit more red than green. Although there is some green on the recent right side of the chart here. We have 2 big red candles. You've got this one, which is kind of a nothing day, which could be implied as accumulation. and this one here towards the top, which could be seen as distribution. So I think, yeah, we're probably going to have a full-fledged breakout unless you want to do a very low-risk entry type of a scenario. But again, if you know from real crypto, those low-risk entries have, I think, a higher probability of being stopped out. No fairly well-defined trend line there. So let's keep this on the radar. I'm going to go ahead and put an alert on this. Looks like it's about a $1,500 option. Yeah, let's take a look at that, Kevin. I'm going to put SIVB down here actually in my current watch list. Ooh, Fizz down 2.3 today. Okay, volume pretty muted compared to yesterday, but we had a pretty good day yesterday in Fizz. Apparently, earnings was before the market opened and during market. What? Yesterday it said undisclosed time. It happened during the market, which is why it rallied. If you remember, it rallied, sold off, then rallied again. I just kind of lucked out holding through earnings on that one. Just be flat out honest with you guys. It looks like the earnings date was not clear. That does happen occasionally. MUFG. Another Mitsubishi. I'm sure that... Oh, is this very similar, just in the U.S.? I'm not sure where you're pulling those numbers from. 7.4 is kind of in the middle of nowhere. Is that a Fibonacci level, Kevin? Because that's the only thing that makes sense to me that you could do 7.4 as resistance. So we did put in a low here. There is a semblance of a reversal pattern right there, which would be an inverted head and shoulders. The head looks very well formed. Each shoulder's a little spike. We'll see what happens there. A couple of trend lines to contend with. You know, ideally that would be supported, but we're really close to it, and so far there's not a lot of price progress upward. So we'll see if we just cut through that. But there's another trend line here, so you're kind of stuck in this little triangle towards the tip of this triangle here. Yeah, Fibonacci. Okay, I thought so. That's also quite a ways away, 7.4. It's like 23% higher. And you're not in a perpetual uptrend here. You do have a higher low, and that's your one good point about this chart, to be quite honest with you. You have a high volume bottoming candle, which also is a good sign. So that may sustain us. But if you don't curl up soon here, so this isn't something I would typically trade, Kevin. Looks like you're into banking stocks, which is fine. SIVB is a banking stock. I would much rather trade SIVB. And you see the difference here is the whole chart is pointing higher. We have a very well clearly defined level of resistance. And then whenever that gets broken, then it's likely to continue higher. Okay? And it doesn't happen like that all the time, but it's, in my opinion, it's yeah, we saw that in the beginning, Eli. It was on IBD's cover story. But yeah, in terms of MUFG, you're looking at a potential turnaround play. Not my forte, to be honest with you. Not my forte there. And I really don't get too involved in stocks like this. This doesn't kind of meet my criteria. Well under the 200 period day moving average. The other two moving averages intertwining, the 10 and the 50. So I would not be interested in trading this one, just to be quite honest with you. Now, I would be trading it in this scenario with a nicely declining trend line with a fairly well-defined bottom area. We've already been basing for a number of months. This would intrigue me here. This right here, not so intriguing, making new lows. A very aggressive trend line here, very aggressive trend line here. So just kind of give you 2 cents. If you want to throw a bunch of stocks you're interested, we can go through them. We did that exercise with another gentleman. Actually, as a matter of fact, that gentleman sent me an email that I never finished reading. Damn it, I wanted to read that email. What's Twitter doing? I have no idea. I stopped looking at it because I really don't care. I'm going to wait for some time to pass, and then maybe I'll be back interested in Twitter again. But I'm not going to chase it. It's like an ex-girlfriend to me now. Not really too concerned. So, bit of a bounce day here. See 2 high volume sell candles here after the Senate hearings. Could be a good place to enter due to the Senate hearings. I don't give those a lot of relevance to stock price. At the same time, I really don't feel like being whipsawed. I'm personally emotionally disturbed in Twitter right now, so I need to see a good chart pattern. Other stuff to trade. That's how I'm looking at that. Match doing pretty good today. Coming back, FIVN. Apple doing good, 0.61. Let's take another look at the NASDAQ. Looks like it turned positive, bouncing off of that 50-day moving average we discussed earlier today. After yesterday's very high volume day, at least in terms of the futures, this symbol NQ is a futures symbol. Now, I believe there's a stock NQ. Yeah, so NQ Mobile is a stock, but /NQ, at least in Thinkorswim, will give you the futures market. The slash indicates futures. If you're not in Thinkorswim, that slash may not work. You'll have to look at your individual platform to see what may work. Looks like a lot of things have turned bullish here today. We've got Twilio. Move to the upside there. There we go. So we got Twilio there moving to the upside, at least 2.65%, whatever that's worth. And that would be a good view if we could maintain that. We mentioned yesterday could be a good pullback buy on Twilio in the morning, but the rest of the day did not really go according to plan. I lost sight of it, didn't make a pullback buy. Probably still could be a decent buy here with a pretty good low stop loss level. MTCH. This reloads it every single time. That's going to be fairly annoying. MTCH today having a pretty good day. Volume not very aggressive though. Only 141,000 traded out of 2.5 million average. So a long ways to go in terms of volume on that one. BE just overtook it. BE looks pretty good right there. I like that as a bottoming candle. Look at that. Open and close at the exact same level. Opens 20. They're within 2 cents of each other. I actually really like that. Let me look at BE. I think we have some options in BE. We do have some options in BE. And looks like we could be coming to a point where we're going to be crossing some resistance. If these lows hold here, which so far they are, see the open there, never really went down at all. And today we came back down to yesterday's open and ratcheted higher. I'm a little more interested in this now. I want to see what the volume is, so let me reset my chart a little bit. Okay, so there's volume. Okay, nothing really to write home about on this particular candle. I was hoping that would be increased volume, but it is not. Actually, very decreased volume throughout this whole area. We have a little bit of sell-off here. Since then, it's been very muted comparative to recent history. We have two low volume points here, a high volume sell-off, a low volume area, high volume sell-off, 2 low volume candles, and then kind of a reversal candle with some topping to it. That's a weird candle and chart pattern. The next day appears to be your go sign, and actually I think we were looking at that in real time. And then now what we have is another kind of a low volume up day, very much in concert with what we saw with was it Twilio? Or Match, we were just looking at the ultra low volume right here. So I'm not sure if this is, when you see ultra low volume on these up days that look good, sometimes it's kind of a sell signal, to be honest with you. You may get some distribution. If the price and volume don't start catching up to each other, that could just end up being some some volume telling you to get out. Now the NASDAQ here doesn't look too bad on the index. We don't have super low volume here. It's not going to be a high volume day, I will say that. So I guess pick your spots, pick your poison in terms of some of these names if you want to take positions. Yeah, BE looking really good here. So our 20% level from there is 36. So let's look at 36. And not very great in terms of price percentage gain. But that's, yeah, a little more risk than I want to take in terms of BE, I think, from an options perspective. But from a stock perspective, it could get interesting. Let's look at Control 4. That's on my short list. We just saw match. FIVN doing good. Breaking out into new highs. Volume, not very aggressive, but neither was yesterday's. And a pretty good support day of the previous day to FIVN. Here actually finding some support down here. A little bit of a, not a rounded bottom quite yet, but it has those tendencies. And then SIVB we just discussed. We just added that there. Cores looks like it's maintaining here. CRM doing pretty good. DPZ. I didn't put Cisco. Cisco needs to be on my list. So that could be a fairly interesting. That could be a fairly interesting point for Cisco. No major breakout point on the breakout, which is really abnormal. Ideally, you would like to see a high volume day on a breakout such as this, but it looks like it's moving. I've seen a few of these move in the past, up 2.5% from the breakout point. Workday coming back. Yeah, we noted yesterday this may be an interesting place to get into Workday after such a negative reaction to what was pretty good earnings. I mean, they weren't spectacular, and that's I think what they're being hit for right there. Whether that proves to be a one-time event is yet to be seen, but I think maybe a break over this level could be interesting. So let's create an alert on that. All right, FFIV. Pretty decent day there. Again, volume very thin so far. Shutterstock. Not looking as hot as many, but a pretty well-defined support level there at 51, it looks like. Look at those 3 days, including today, just barely poking below that 51 level. So that could be something. Regeneron taking another hit today. So far, it looks like it's being bought up. Again, lower volume. We'll see how that ends up. WHD still back in filling. Yesterday was a pretty aggressive day. I want to go to the 5-minute. I actually took a position in this. So, okay, the volume came in after we started going back up, so that's good. So hopefully there's some support here at the 32.50 level, 33 level. Generac doing okay, not great. Garmin. Looking pretty good still. Looking good up there. And then Fizz down 3%, retracing most of yesterday's earnings move. So, mixed market as you would expect in a mixed market. NASDAQ looking pretty good. Look at those key stocks that are doing good. We got 5 gapping up on earnings. INSG. We talked about that earlier in the middle of this. Looks like it's rallied some more, a few more percent. We've got ZS after pulling back into the base. You may want to wait for this to get some more volume before you're interested in that again. If it were consolidating above the base, I would feel better about it, but it's consolidating within the base right now, so I would view that with a little more skepticism. And Funko and Boot were ones we talked about a few weeks ago. Just, man, Funko just won't stop. And Boot behaving very healthy throughout this entire uptrend. So both of those looking pretty good. Not too bad, not too bad. So you guys want to talk about anything else other than that? I think I'm going to get out of here, get the kids ready for the day, and I'll get back after they're gone and do some more stuff. Get ready for the Crypto Power Hour. Man, that SIVB looks really nice up here. I may have to go double check that. So, DB quickly, absolutely. You just don't like yourself, Kevin, do you? Glutton for punishment. Yeah, no. In no way, shape, or form would I be buying Deutsche Bank down here. I'm not a bottom buyer. So here's the thing about charts like this. So this is a weekly chart, okay? This is a weekly chart. You can make money a lot of ways in the market, Kevin. I'm not saying my way is the best way by any stretch of the imagination. If you have a tendency to go towards value, if you have a tendency to go towards those types of companies that are beaten down, looking for a retracement, I get it, completely get it. It's just not my particular style. Now, one thing I have to say about stocks that are beaten down like this is that you have no expectation without doing extremely good analysis and having a ton of information. You really have no idea when they're going to come back. Okay, even if they're at what appears to be low levels, keep in mind, over here in 2013, we were at 30 on Deutsche Bank. And I don't know where its high was, but it looks like it was much higher at about 100. So 30 seemed like a pretty good discount. And now, 10 seems like a pretty good discount. But we can continue going lower. From a technical perspective, I will say this. High volume here is positive. Someone took a huge position in Deutsche Bank right there. Obviously, you can see the volume over those 2 days. Someone took a massive position around $10 around Deutsche Bank. Now, we have kind of supported that level once, but as an individual investor, you may or may not have the patience to let a position like this play out over years. Okay? Yeah, so you may have to you may have to have a very long-term time horizon. Now, the one good thing about buying really beaten down stocks like this is that when they do come back, they can come back pretty quickly. So, going to 20, you're looking at like a 90 to 100% gain. If you're willing to wait 3 years for that, I think that's fine. But you have to know what you're getting yourself into. I don't have that kind of patience. I just don't. I'm willing to be patient for a number of weeks, maybe a number of months, but I can't be patient through entire market cycles. It's just not in my personality type. So, to each his own. And I realize every time, usually what happens is when I'm looking at stocks that someone is bringing me and it's the complete opposite of what I like, I try to qualify my statements by saying, this is different from my style. Different styles can work, and here's how they can work, and that's what I'm talking about right now. So, not my style. Can it work? Absolutely, it can work. Will it work? I don't know. I don't know. But again, you have to have longer time horizons, in my opinion, when you try to buy these really beaten down stocks. Now, another way to buy these beaten down stocks is something we talked about in Real Crypto from time to time, is when you see these beaten down stocks that have a maintained trend line such as this, or even if it's not a maintained trend line, you just have a series of lower highs, what you can do is put alert levels at these highs and wait for them to be taken out. So here we have a high level that was never taken out, so your alert would never have been hit. If you look at this after a couple of months, it keeps going down. You have another, maybe you put an alert here that was never hit. So let me just do this because it'll save me some time. Maybe you move your alert level down to this high, to this high, to this high. Now I'm looking over here. Keep in mind, my cursor's here, but I'm looking on at the price point. That high, a little bit above that high, and if you continue moving it lower, and things start getting hit, what you want to look for is major swing highs. Okay, so I think this would be a much more major swing high right there, because there's a bit more width here. So you don't want to take every single high as it comes down like this. You want to take the major highs. And notice that's right where it stopped, is at one of the major highs before continuing lower. Now you almost have another major high right here. So if you're interested in Deutsche Bank, now granted this is, like 12% higher or something, 20% higher than where we are now. But if you don't want to have the dead money, because here's the thing, if you blanket buy one of these, if you just buy it because you think it's low, then if you bought here, you're down a tremendous amount. You're down now about 40%. That hurts. A 40% loss is a definite hurting position. Even though it doesn't seem we've dropped that far, it's a 40% loss. That's bad. In this scenario, what you get is, yes, you're missing 20% of the move, but guess what? You at least have a potential expectation for it to increase. Does that make sense? So that's how I approach these situations. I never do this because it's not my style, but this is how I would approach this if I were to do this. Is I would really wait for a high to be broken before getting into a stock like this. Yeah, it's definitely dead money. And like you said, your 12 can get to 7. That's another 40% loss, Kevin. How is that acceptable? Under what circumstances is that acceptable? Like, seriously. If you were to take a 40% pay cut at work, would that be acceptable? If you were to take anything and have a 40% loss in it and you expected a return, would that be acceptable? I don't think it's acceptable. I think it's not acceptable. If you're going to put money to work, look, you're not Goldman Sachs. Okay, you're not JP Morgan. This isn't 0.5% of your portfolio where you can have the patience. Most individual investors put large percentages of their account into positions. 10, 20, 30% of their accounts into these positions with the expectation of large returns. If you're going to have that type of a money management style, you have to trade something which can give you like an instant return, like the SIVB, like something sitting at highs that you're looking to go higher. It comes down to, and this is a business, Kevin, right? What's your return on capital that you expect? What time frame do you have for that return on capital? So anyway, I'll jump off of that horse, and I got to get going, guys. So good question, Kevin. Thanks for joining me, guys. I'll see you next time.